Article 56. Input tax paid before tax registration. 1. Recovery of input tax paid before tax registration. A business that becomes a registrant, i.e., formally registered for VAT, may recover input tax that was incurred before the date of tax registration. This recovery can be claimed on the first tax return submitted after the tax registration becomes effective. This ensures that businesses are not penalized for VAT they paid before becoming officially registered, provided the purchases were for business purposes linked to taxable supplies. 2. Eligible transactions for pre-registration input tax recovery. A registrant can recover input tax on two types of transactions that occurred before their tax registration date. A. Goods and services supplied to the business before tax registration. Input tax paid on purchases of goods and services received before tax registration can be recovered. This is only allowed if these goods and services are used, after tax registration, for making supplies that allow input tax recovery, i.e., taxable supplies. B. Goods imported into the UAE before tax registration. Input tax paid on imports that occurred before the tax registration date can also be recovered. Again, this recovery is only allowed if these imported goods are used, after tax registration, to make supplies that allow input tax recovery, i.e., taxable supplies. 3. Conditions for recovery. In all cases, the goods and services must be directly related to making taxable supplies after tax registration. The taxable person must ensure proper documentation is retained to support the claim, example, valid invoices, import documents, and evidence of intended taxable use. 4. Cases where pre-registration input tax cannot be recovered. There are specific situations where pre-registration input tax is completely excluded from recovery. These are: A. Non-business or exempt activities. Input tax cannot be recovered if the goods or services were received for purposes other than making taxable supplies. Example, if the purchase was for personal use or related to exempt supplies, like certain financial services, recovery is not allowed. B. Depreciated capital assets. Input tax cannot be recovered if the purchase relates to capital assets that were partially or fully depreciated before tax registration. This ensures businesses do not claim tax relief on assets no longer contributing to taxable activities. C. Old services, more than 5 years old. Input tax on services received more than 5 years before the tax registration date cannot be recovered. This rule prevents businesses from retroactively claiming tax on very old transactions. D. Goods moved to another implementing state before registration. If a business purchased goods before tax registration and moved those goods to another implementing state, example, another GCC country applying VAT, before UAE tax registration, input tax cannot be recovered. This ensures recovery is only permitted for goods actually used in taxable activities within the UAE after registration. 5. Purpose of Article 56. This article balances fairness to businesses, allowing legitimate pre-registration VAT recovery, with safeguards against abuse, excluding non-business, old, or irrelevant purchases. It ensures that VAT is only recovered when the purchases directly contribute to taxable activities after registration. For more details, contact us.